In this video, I'll show you the top 3 renewable energy ETFs to buy right now. I'll also show you the top holdings in each of these funds, as well as the dividend yield, expense ratio, and market cap. And stick around till the end of the video because each of these ETFs could earn you a triple-digit return in the future, and I don't want you missing out on any of these funds. Hi, I'm Jeremy Zargami, and welcome to my channel. Today, I'm going to show you the top 3 renewable energy ETFs to invest in right now. The world is quickly moving towards using more sustainable energy, so why not invest in these new innovative companies that are making this possible? The new administration is going to make a huge push to transitioning to more sustainable forms of energy. In fact, President Joe Biden has already signed an executive order, ending federal subsidies for fossil fuels, aiming to double U.S. offshore wind capacity by 2030, and directing infrastructure planning to accelerate transmission and clean energy build-out. If you haven't already, click that like button, because the way the YouTube algorithm works, if you don't click that like button, YouTube will show this video to less people. So to help out this channel and to help more people see this great content, hit that like button down below. And if you're a beginner investor, don't forget to subscribe. This channel is all about helping out new investors and guiding them along on their journey of growing their wealth. So be sure to subscribe and hit that notification bell so you can see every time I post a new video. I post a new video every Monday at noon. Now let's get into it. The first ETF on my list is QCLN, the Nasdaq Clean Edge Green Energy Index Fund. QCLN holds a broad portfolio of US listed firms in the clean energy industry. Eligible companies must be manufacturers, developers, distributors, or installers of one of the following subsectors: advanced materials that enable clean energy or reduce the need for petroleum products, energy intelligence like smart grid, energy storage and conversion like hybrid batteries, or renewable electricity generation like solar, wind, geothermal, etc. This ETF is among the least expensive and most liquid funds in its segment, making it a strong contender for investors considering the space. QCLN holds 44 different companies in its fund, giving you great diversity in the space. It has an expense ratio of 0.6%, which is about average for ETFs in the renewable energy space right now. It has a dividend yield of 0.25% and a market cap of $3.3 billion. At the time of this recording, QCLN is trading for $81.31 per share. Some of QCLN's top holdings include Tesla, Plug Power, Enphase, and NEO. Plug Power is an American company engaged in the development of hydrogen fuel cell systems that replace conventional batteries in equipment and vehicles powered by electricity. Enphase Energy is an American technology company that designs and manufactures software-driven home energy solutions that span solar generation, home energy storage, and web-based monitoring and control. And just in case you don't know, Tesla and NEO are two of the leading companies in the electric vehicle space. The next ETF on my list is PBW, the Invesco Wilder Hill Clean Energy ETF. PBW is highly diverse in scope, reaching beyond its industry pure plays, like wind, solar, biofuels, and geothermal companies, to include companies based on their perceived relevance to the renewable energy space. PBW follows a tiered equal weighting structure and caps any one holding at 4%, which significantly reduces concentration in dominant players like First Solar. So they don't allow any one company in the portfolio to make up more than 4% of the fund. This is good because if any one company does poorly, it won't affect the price too much. While some people think this could also affect the upside, it's less likely because this is a growing industry, which should help the overall stock price increase over time, while minimizing downside if a company in the fund goes out of business or underperforms. PBW holds 51 different companies in its fund. It has an expense ratio of 0.7%, which is slightly higher than QCLN. It has a dividend yield of 0.34% and a market cap of $3.64 billion. At the time of this recording, PBW is trading for $120.26 per share. Some of PBW's top holdings include Daqo, Renesola, Lithium Americas, and Fuel Cell Energy. Daqo New Energy is a Chinese company that is the leading manufacturer of high-purity monocrystalline silicone and polysilicon for the global solar PV industry. Renesola Limited develops, builds, operates, and sells solar power projects. It operates through these 3 segments: solar power project development, EPC services, and electricity generation revenue. The company also develops community solar gardens and sells projects rights. Lithium Americas operates as a resource company in the United States. The company explores for lithium deposits, and it primarily holds interest in a project in Argentina and owns 100% interest in the Thacker Pass lithium project located in Humboldt County in northern Nevada. On Tesla's battery day, they talked about mining lithium in Nevada. So this caused some speculation to whether Tesla would partner with or purchase Lithium Americas. So this might be something to keep an eye on. Tesla may just do their own thing, but we'll see. Fuel Cell Energy is a fuel cell power company. It designs, manufactures, operates, and services direct fuel cell power plants that run on natural gas and biogas. The company's SureSource power plants generate clean electricity, usable heat, water, and hydrogen. The last ETF on my list First is LIT. I'm not trying to say it's cool, that's literally the name. It's the Global X Lithium and Battery Tech ETF with the ticker symbol LIT. LIT tracks companies involved in the global mining and exploration of lithium, or in lithium battery production. LIT is an excellent fit for investors looking for niche lithium exposure as an ETF. The index is reconstituted and rebalanced on an annual basis. LIT holds 41 different companies in its fund. It has an expense ratio of 0.75%, which is slightly higher than both QCLN and PBW. It has a dividend yield of 0.35% and a market cap of $65.29 billion, which is substantially higher than the other two ETFs I've talked about in this video. At the time of this recording, LIT is trading for $68.31 per share. Some of LIT's top holdings include Albemarle, Samsung, Tesla, Panasonic, and LG. Albemarle Corporation is a fine chemical manufacturing company based in Charlotte, North Carolina. It operates three divisions: lithium, bromine specialties, and catalysts. Albemarle is the largest provider of lithium for electric vehicle batteries. I'm sure you've all heard of Samsung, Tesla, Panasonic, and LG, so I won't go into those companies, but they are all putting a ton of time and money into mining and producing as much lithium as possible. If we're going to transition to renewable energy sources, we're going to need enough batteries to store all of that energy. So these companies will be in high demand for their capability of mining and producing lithium batteries for many years to come. What are some of your favorite renewable energy companies? Comment down below. If you liked that video, I'm going to put another video right here that I think you will like. So click on that video and I'll see you in the next one.